Well, hello everybody. It is January 31st. End of the month, end of the quarter. Big, volatile downside pressure this month, but we did end up on that likely case that we talked about last week, and that is that we'd see some sort of volatile sequence of pullbacks and rallies and, a potential bullish ABCD structure by the end of the week, and that's exactly what happened. Down on the year, down pretty big, but they are set up to bounce this farther. So let's get right to it. The two key sectors, somehow they pulled them out on Friday, XLF, XLI. On the XLF, the big rocket shot there on Friday takes us up 2.75, 2.79%. 2172 is the number. If you look at the monthly, though, gets under the low, back over it, right, holds it. Volume expands 12 versus 12.4 versus 12.1 versus 12.4. So even though it expands, still lighter volume, and you're going to see all these tests have the same thing. They all come under, they all get back over, not all of them get back over, but they all come under or test into the October lows, and they have slightly less volume doing so. They're not ready to break it down. Now in the XLI, you see the same thing, right? Here you're testing two swing point lows, but the important one being the October low. Get under it, less volume, get back over it, close above it. Now where that wasn't true was the transports, right? The transports get under the swing point low here, right? Close back over it, stay under it, less volume though. And what do we got here? 8.7, and there you do 7.2. So you get a suspect break. Two in a row, and this actually has finished off an ABCD structure. We'll look at that later, but again, goes bearish on the transports, but it looks like that bearishness is probably done for now in terms of the extension. And then of course the other one that we were watching was the Russell on the monthly. Here, swing point low, test into it. That was at 942. You got down as low as 958, so you almost were trying to break two of them. You did break the October low. You have less volume. It's a suspect break, but it is a break. It's the first index on the long-term time frame to break lower. And why the rally? Well, it's what you would think it would be. It's the central bankers, right? Draghi promised, didn't do anything. The Fed kind of made a nod to the markets last week. That didn't do anything. But when the Bank of Japan went to negative interest rates, Friday we saw that move overnight, huge move up, right? They devalued the currency. So if you look at the yen, for example, you can see a huge drop in that yen. Now that actually finishes off an ABCD structure to the downside, but they got the big drop. They got exactly what they wanted, what they're always after, which is to make their currency relatively weak. That props up their domestic markets. That rallies equities around the world, because why? The assumption is everybody else is going to do another round. Everybody else is going to do something to devalue their currencies to match Japan's. And that was what the rally was all about. You got bullish ABCD structures that fired on most sectors and indexes. We'll look at some of those. Most of these structures point to another 1.5 to 2%, right? Before the one-to-one extensions are done. That's why I said at the top of the show we're probably going to see more of a rally. After that, you'd have to expect they're going to go sideways or retrace, and then that sideways market, it's much stronger if they do that. And so let me show you what I'm talking about using the S&P 500 here. So let's assume that this is going to finish off its ABCD structure to the upside, right? Somewhere up in this area. Actually it's about 67, so it's about up there. Once it gets up there, right, if it can just like hang up in this area, right, and then get the next move, it can go in to do the bearish retest regenerate, right, off of some sort of a small pullback, right, another ABCD structure to the top side. If you don't do that, in other words, if you come down deeper, say maybe all the way down to here and then get the push, right, then you barely get into the lows, and that is probably the more likely of the scenarios going forward. So in other words, we get a deeper retrace once we extend, and then we come back. The opposite case may be that this thing just keeps extending and goes right into it. In other words, overruns the 1-to-1, pushes higher, and then we get some sort of a pullback off of that. This case is a great short setup case. In other words, you just extend farther than you should, right, off of all the enthusiasm running into a first test, bearish retest, and when you do something like that, in other words, you're coming up hard and fast, and you come up to an area where there's a high probability that you're going to fail, that's a pretty good situation to turn around and short this thing. Now, those larger themes that were out there, they haven't gone away. They're still there, right? This market is still unlikely to crash. It's going to carve out some sort of a larger range. We've been thinking that for a long time. Last week, it was very touchy. It wasn't as if it was going to do this. As a matter of fact, I pretty much gave up on it, just like some of you. But it's more like we're going to see some sort of a decade-long type, 70s situation again for the exact opposite reasons. This monetary policy, Japan and Europe, I said, that they're going to QE. Well, instead of QE, they did the NERP and did the same effect. China, it's got major breakdowns, right? Major breakdowns around the world. They're going to lead to potentially larger bounces over time. And these three big markets, right, the mature markets, Japan, Europe, U.S., right, they're going to have to work, or they're going to probably work higher with these larger bounces elsewhere. And then the other thing I talked about was, this larger theme of commodities probably finding a bottom, some sort of an intermediate or maybe even a long-term bottom. Last week was a good start. You can see that in the gold charts. Here's the daily charts. If you look at this, this has been doing little ABCD structures on the way up. It's been bullish for a while now. Last week it actually extended a nice big push up. Now has the retrace. And if it pulls back farther, which I think is a good chance, right, into this area, right, that retrace into here will set up the next move to try to take it higher. Now, this on the daily is not the big story. The big story is over here on the weekly, right, because the weekly ABCD structures on the upside as well, little small ones to get started, right, and now the larger one that pushes a little bit higher, trying to get into this area. But the key here was the bearish retest regen. We haven't seen one of these get over the top in a very long time. The top of this was 106.65. We closed at 106.94, so you're over it. Key this week is to see it hold. If it does, it potentially is going to carve out that longer term bottom. Now, I don't want to forget the bearish backdrop because it's still there, right? It's going to come back. I don't think it's gone. And I can give you, multiple reasons for that. But, this larger picture bearishness in my mind hasn't gone away. It's just mitigated. Technically, we had more deterioration. In other words, we had like the IYT go to bearish. You had the Russell. You had the XLF, XLI test the lows. You had other indexes testing the lows. Volumes were not as great, but they were close. They were within a couple percent, right? S&P tested couple percent. The NASDAQ, 3%. I mean, all of this, 3% heavier on the August lows. All of this, so the suspicion is that you will come back and try again. It's not over. You're just going to bounce in between. And that was kind of what we thought might happen. And as I said, I pretty much gave up on it. Once the Fed couldn't do anything, I pretty much gave up and discounted it and thought the Bank of Japan would do nothing. Well, they surprised. They did something. That got the markets, which were very oversold, to get a nice big bounce going. Even though this larger picture grows bearish, right, these central bankers are a huge part. Folks, they have put all their money on this bet. This is like Texas Hold'em all in. They've put everything on this bet. If this bet fails, they are in deep doo-doo, and the world is in deep doo-doo. And so they're not going to give it up. They're going to keep trying. They're going to keep pulling out strings. They're going to keep doing whatever they can. I think it's going to be a death by 1,000 cuts. It's not going to just be a crash. So the bottom line here is the Bank of Japan ignited the rally, right? You got all these hope trades that's still alive. The market did claw out that short-term bottom. Now it's got the bounce, and these ABCD structures, once they're complete, I expect them to set back, try to set up another set to take them up to those bearish retest regenerate zones. Now, I've already shown you the one on the S&P 500, but you have them everywhere. They're all over the place, right? The breakdowns created swing point lows being broken, which led to an escalation down. Now you're trying to come back up there. And so the ideal case for the bulls is you do your ABCD structures, you pull back, and you do it again and take yourself up there. And that's the scenario that I don't know if it's the most likely scenario because we'll have to see what it looks like as it develops, but that's the kind of scenario where you get back up, you test this, that's a 92%er, it's going right back down again, right? It doesn't mean it's going to break down and blow out the bottoms, but that's a high percentage case the first time back after more than 6 bars that they're going to sell it. And so when we get there, that's going to be the trade. I said earlier that that we had that volatile mix of pullbacks and rallies, and eventually that structure set up, and that's what happened. And they did it on the very last possible move, saving those monthly charts and so forth. What's the best case this week? I think the best case is you just go straight up to those bearish retest regenerate zones. So in other words, if I look at the S&P 500, I carve out a scenario here where this thing just says, okay, I don't stop on where I should stop like here. I just keep going. I go straight up into it. That's probably the best case extension. It's not the best case for the bulls in general because I think they're going to get sold hard if they do that. But in terms of where can you go on the upside, I think that's the best case. Worst case, a retrace to test those breakout lows. So in other words, if I look at the worst case, I would expect us to just come right back here and test this again, right back into this area. What's the most likely case? Well, the most likely case is you do what you should do, which is you come up here, you do the ABCD structure, right, and then you start to pull back. And I think that points to about 1967, we'll see here in a second, and then you come back off of that. I think that's the more likely scenario. Now, whether that push up kind of finds resistance and it takes it all week to get up there and then starts to pull back next week, or maybe it's this week, but I think that's the scenario that's most likely. Now, I've got a lot of technical details in here, mostly ABCDs. I went through and I figured them all right. The things that I want to point out about this is like biotech, it's done what it needs to do on the weekly, so it's probably going to get a bounce. But if you look at the monthly, this thing has farther to go, so don't get too comfortable if you're going to try to go into that sector. Transports, long-term, monthly, done, ABCD structure down. That means they're going to bounce and probably try to set up another one, right? If we really have a bearish market, that's what they'll do. But for now, the transports have been sold hard, they're done. Safety stocks, those guys found pressure on buying side right immediately. Utilities, XLP. Now, XLV couldn't because of the biotechs. Where's the biggest near-term bounce candidates? It's here. It's the XLY and the SOX. That's where I'd be looking if I'm trying to play sectors. Others still have room to leg higher, but like some of these are already done, and some of them are very close. Which ones? The weak ones. XLF, XLI. They've already made their bounces. They made their stick saves. They're almost done on the move higher. The one that I really want to watch is the energy sector for the bearish retest regenerate. That's where we're going to get our next set of clues. World markets, if you look at these, Asia has a lot more pain in front of it if you look long term. This is another reason I say that we're probably not done. The monthlies, 15% more here. SSEC, the Shanghai, another 26% projections on the long-term time frames. Europe, they're not done on the, if we look at the short term, right, on the dailies here, they've got another 2, 3, 1.5 on the Nikkei, and then we go to ours 2.6, 2.7, 2.5, 0.72 on the Dow, 1.6 on the S&P. Those are the projections. So you can see the strength. If it's going to come, it's going to be up here. That's probably where you want to play if you're playing on the indexes. Here's some links for you. I added this link, Understanding Economic Indicators. You ought to take a look at that. It's actually one of the better books I read about economic indicators. We're going to have a lot of Fed speak this week, a lot of data, so we'll have a lot there to look at. If we're really going to keep this bull market going, if it's not dead, Fed is going to have to say they're not raising rates anymore, and they're actually going to have to do a NERP themselves. Either they're going to do negative interest rate policy, or they're going to come out with another QE. Now, that's hard to believe here. I'd already suspected, as I said last week, that they probably won't raise interest rates anymore this year. If anything, it'd be real late this year if they did it. If these markets are going to really rally, the Fed's going to have to reverse its policy. And I don't know if that's going to happen or not, but that's where I think we are in terms of central bankers. Last week, as I said, I made some money on those long trades, but nothing like what I left on the table. I gave up on Thursday. I gave up on Friday morning on those trades. And then, of course, we got that rocket higher on Friday off of Bank of Japan. Down to a little bit of position here. I'll probably look at the QQQs. These can run like we just saw. They can run higher. If you go back up here and just look at the NDX, you can run 2.7, 2.6. So that's worth trading, and especially if you can catch about a 0.25% pullback Monday. And so you'll see me probably put an order in there. That's it for this week. Strong rally. I guess we shouldn't be surprised. That's what the Fed, that's what the central bankers do. All the marbles are on the table for those guys, and they're not going to give it up. So we have to expect any and every time we have issues, they're going to come in there and try to do what they did this week. Thanks. Take care, and I'll see you next time.